You are listening to chartingwealth.com for Wednesday, the 29th of November, 2017. We see stocks, that is the S&P 500, the Qs, the NASDAQ 100, and bonds up for the day. Gold down. Believe that's the opposite of what happened yesterday. So let's see how things are shaping up for the week so far. 2 days into the weekly candle. What do we see on the S&P 500? We see the price percent oscillator. That is our king of oscillators. The blue line that represents the price percent oscillator is heading up even stronger, particularly stronger over the prior week. We see the derivative oscillator continuing to lose energy. We see a nice fat candle. In fact, one of the biggest candles we've seen in about 6 or 8 weeks so far. Now, it could lose that. That could burn off. But that's what we see. S&P 500 up 1%. So that's where we are on the weekly. What do we see on the 2-day? And by the way, we're working furiously like little elves preparing chapter 6 for the book that we hope to be putting out later in the week, particularly for all of our subscribers. So if you want to receive it first, go to chartingwealth.com, sign up for our daily market reviews, and you get those chapters first as they come out. 2-day chart. Now again, remember the last candle closed on Monday. So the candle on Tuesday is just the first day of the latest candle. It will close out on Wednesday. So it doesn't count yet as a crossover, but it looks like we're going to be having, pretty much for sure with that strong a crossover, a 2-day crossover going up. Now that is very important. Why? Because, of course, the 2-day has been in a down move on the S&P 500. That crossover going up means that the 2-day and the weekly will be going in the same direction. It gives us the opportunity for plays, for actually buying in to the up move. Derivative oscillator still negative. It may switch over to positive. But again, remember, a candle's not drawn until the time period closes out. And the first day of a 2-day candle doesn't mean that it has drawn yet, because they can pull back. So we'll keep you posted. What do we see on the 4-hour chart? Well, of course, strong up movement after a sideways slide for 2 days. The 24th, the candle on the 24th through the candle on the 27th. So we shall continue to watch things, but strong up movement in the morning and then strong up movement in the afternoon. And again, we'll just continue to watch even stronger up movement in the afternoon. Now let's go back to the weekly chart, and we shall go to the Qs. That is, of course, the NASDAQ 100. What do we see going on there? Well, not as strong an up move as last week so far. Derivative oscillators continuing to gain energy. And of course, the price percent oscillator, again, not quite as much energy as it had the prior week, but we see a strong candle nonetheless building. Not as strong as it was back on the weeks ending the 3rd of November and the 10th of November when that movement was above the Bollinger Band. But again, those Bollinger Bands have stretched out. Why? Because they're volatility bands. They represent volatility. So when we look at the 2-day chart, what do we see? We, of course, see the 2-day chart. It had been losing energy on the price percent oscillator. Looks like it's at least flattened out and maybe moving up a little bit. I'm sorry, derivative oscillator. Price percent oscillator continuing to kick up just as strong as it was in the prior week on the 2-day chart. That is, of course, good. Now, of course, we're in a confirmed up move on the weekly and the 2-day. As we look at the 4-hour, what do we see? Well, the 4-hour, we had that crossover, remember, and a jumping in point somewhere around the opening at 254.98, up as high as 256.37. So again, we told you to watch that 4-hour candle. Things are looking quite beautiful. Continue to keep your eye on that. If you've made $1 or $2 and things start to roll over going down, my friends, of course, don't get greedy and lose that profit, but be happy to take what you get when the market gives you cash. Again, virtual cash. So we are now going from the Qs To the weekly chart on TLT, the 20-year bond fund. What do we see going into the fifth week of up movement? And it looks like we might have a weekly vertical crossover at the end of the week. Again, only 2 days into the week so far, but with that strong up movement, again, just for the day, it was only up 0.13%, but the candle's looking strong. Derivative oscillator and the price percent oscillator are moving up. We'll continue to track and see what's going on there. 2-day chart, of course, we see a little bit of burning off of some of that initial upward bound. We see that latest 2-day candle was a red was a red candle, red open box, not as strong as a red down candle on our Heikin-Ashi candlesticks. But the latest one, again, is above the 2-day trend line, but just barely, and not going up at the same angle. But we'll continue to watch and just see what we see. And of course, as we drill into the 4-hour chart, we can see that it's really just sort of been sliding sideways all the way back to the afternoon of Wednesday, the 22nd of November, and actually crossed over going down in the afternoon, even though there was some up movement. So again, that pullback happening, that's okay. We'll just continue to watch and see how the week ends up and if we have that weekly vertical crossover. If we do, all of you who subscribe to our text service and the instructions are there for everyone who is a subscriber to chartingwealth.com. You just go to chartingwealth.com, sign up for our daily market reviews, and you will get the instructions on how to subscribe for free to our text service. You have to live in the United States in order to get it, but we always announce the weekly vertical crossovers on the comprehensive review and forecast that's put out late on Fridays that you get over the weekend. So you always have plenty of time. But if you live in the States and want to receive that text messaging for free, instructions are there. You just need to sign up for our daily market reviews at chartingwealth.com. That's where we are on TLT. Lastly, the only chart we have that's down for the day, barely down, is gold. We're going to start off with the weekly gold down just 0.02%. Gold still a confirmed move down on the weekly chart, having crossed over, going down back on the week ending the 6th of October. Actually slid sideways, dropped over a little, and really just sort of bounded down around that 120, 121 mark, and really didn't drop below that. So then sort of started moving up. It's not crossed over going up yet on that weekly chart. We look at the 2-day chart. What's it doing? Well, of course, it did cross over going up back on the 17th, Friday the 17th of November. Went sideways for 2 days, and then for the last 5 days has been moving up. Derivative oscillator continuing to gain energy, price percent oscillator moving up. And as we look at the 4-hour chart, what do we see? Well, that 4-hour chart, again, it's herky-jerky, but it is moving up. If you would have waited for that crossover to be confirmed and jumped in somewhere around the opening at 122 at the end of the day, well, that would have been very hard to do. If you had jumped in sometime maybe in the morning of the following day, trying to jump in the afternoon is tough. It's easy when the crossover occurs in the mornings and you can jump in the afternoon. And of course, it would have been confirmed late in the morning on the 22nd. So you could have jumped in. Yeah, you could have jumped in the afternoon at around 122.07, or even the next morning at around 122.36. Either one of those would have been fine. Things up as high as 123.17. But again, I'm getting a little afraid, as you well know, of the 4-hour chart, only because we're getting closer and closer to that time period when it doesn't work. And we had that sideways slide from the 13th of November through about the 16th, 17th. So a little scary there with all that sideways sliding. Remember, oscillators need movement in order to be accurate. And when you don't have lots of movement, things get a little scary. So we'll continue to keep an eye on gold. And again, when we have everything moving in the same direction, we feel a whole lot better about where things are. But again, you gold bugs, I encourage you to keep practicing, trying this 4-hour chart every time that you can, jumping in when it works, jumping out when it starts to let you down. And again, it it popped up on that last time back on Friday the 17th in the morning. If you would have jumped in the afternoon, would have gotten you in at about 121.88. And then, of course, it popped down as low as 121.04. And then, of course, the jumping out point would have been where it crossed over going down, would have gotten you out at about, let's see, at about 121.75, something like that. So again, it wouldn't have been that big a loss if you had jumped in even then. But I don't like it when gold's not trending. And again, I want to make sure you understand that. Oscillators need trending. They need good, strong movement, which is typically what we get during this fat time of the year, during the fall-winter trading zone. And that's what we're in right now, the best time of year. So again, gold gets a little herky-jerky there toward the end of the year. We'll continue to keep you posted. You have questions, problems, concerns, we are always here for you. We love to hear from you. CW@chartingwealth.com. Please, again, subscribe to us at Charting Wealth. Also subscribe to our YouTube channel. You can follow us on Facebook, Twitter, Instagram, YouTube. Everywhere you think we are, we probably are. God bless, my friends. All the best from the entire team here at chartingwealth.com.